Gold and silver prices are once again approaching their historical levels, with silver in the lead as rate cut sentiment, ETF flows, and macro uncertainty build heading into year end. Hello, everyone. This is Razan Hilal, market analyst with Forex.com. Today is November 28, 2025. So, analyzing the silver chart from a daily time frame perspective, we can see that the price action is respecting a bullish bias, trading above a trend line connecting consecutive higher lows since October 28. Now, the current price action is currently challenging the $54 record, which is a key resistance level extending all the way since the 1980 highs. So, we're challenging over here a 45-year resistance and barrier, and we need a clean hold above this barrier to be able to confirm a breakout towards the $60 zone. Now, if you do not manage to have a clean close above this zone, we can be expecting a potential pullback down towards key support levels defined using the Fibonacci extension tool over here between the highs of October 17 down towards the lows of October 28 and up towards the highs over here of November 13. So we can see that the first support zone lies between the 236 and the 272 Fibonacci ratios near the $52 zone, and the clean hold below that is expected to extend that pullback towards the 0.382 level, which is near the $51 mark, aligning with the bounds of that respective trend line. Now, this trend line defines short-term bullish and bearish bias, and a clean hold below this trend line might increase the pressures towards bearish bias, with key levels in sight between 49 and 48 70 respectively, which is the golden 618 of the Fibonacci extension, and also a trend line which was a previous resistance and support to the overall price action between October and November. And the clean hold below that 48.90 level is expected to extend losses all the way down towards the 45 and the 43.90 zone, which aligns with the upper bound of a respected parallel uptrending and parallel channel. I'm going to jump to the weekly time frame over here since 2022. So we can see a clean or a possible strong support zone over here, which might present a buy the dip opportunity should prices reverse above this bound. If we do manage to close below this boundary, then we might have a deeper bearish retracement on the horizon. Now, from the upside, and also in line with a strong relative strength index indicator, still holding its strength above the 60 and the 70 levels, a clean hold above the 54.40 mark is expected to extend gains towards the upper bound of that duplicated respected parallel channel towards the $60 zone. Now, looking at the gold chart, we can see that the price action is still lagging behind its records and silver's overall strength, trading near the 4,160 mark, approximately 200 points away from its all-time record near 4,380. Now, similar to the silver chart, we also have a bullish bias lens over here with price action trading above a trend line connecting consecutive higher lows since October 28. And key levels are defined in a similar manner to the silver chart, with key support levels lying between 4,150, 4,100, and 4,440 before 4040 before confirming bearish pressure, an increase in selling pressures back towards levels 3,990, with next key support levels in line with an overall three-legged corrective pattern near levels 3,900 down towards 3,850, 3,750, and in extreme case scenarios down towards the 3,500, which we will define more clearly on the monthly time frame. So going up to the monthly time frame, we can see that the 3,500 level aligns with the upper bound of a respected uptrending and parallel channel since 2016. We can also see that the current price action is hovering near the mid-zone of the respective duplicated parallel channel between 2016 and 2025, which presents a critical resistance zone in line with the overall pattern target near $4,400, being the target of a cup and a handle pattern formation extending on the chart since 2011. So we have a combination between more than a decade pattern target in line with the mid-zone of a respected parallel channel since a duplicated respected parallel channel since 2016, alongside historical highs for momentum and the relative strength index indicator, which warrants caution on the current highs, especially that gold is still lagging behind silver strength. So we're going to need a clean hold above the 4,400 level to be able to confirm forecasts in line with market consensus towards the $5,000 target in line with the upper bound of the duplicated channel. And from the downside, if you're going to be presented with potential retracement risks, the extreme case scenario of that retracement risk, as previously mentioned, is expected to align with the 3,500 level, which was a previous resistance level to approximately 5 months across 2025 and aligns with the upper bound of a respective channel between 2016 and 2025, respectively. Given gold's lag compared to silver, confirmed closes above the 2025 records are needed to validate the next uptrends as we reach year-end liquidity and volatility risks.